Good afternoon, everyone, and welcome to our Avalara for Acumatica webinar. My name is Marika Deemer, a marketing specialist here at Actions Associates. Now, let me introduce you to our presenters today, Michael Dominguez and Chad Tenery from Avalara. I'll let them tell a little bit more about themselves and then get to the content today. So go ahead, guys.
Awesome. Are we okay to advance slides so they can see us here,
Please do.
Mars?
Yep.
Okay. So this is just a safe harbor statement. So let's just put this up here so you know just the legal information here. And then talk a little bit about ourselves. I don't know, Chad, do you want to go first? Why don't we mix it up? We'll have you introduce yourself first.
Okay. Yeah. Nice to meet everybody. I'm Chad Tenery. I'm a sales executive here at Avalara, and I primarily only work with Acumatica clients. So Acumatica clients who are looking to go live, want a pair of tax automation. Acumatica customers who've been using it for some time and maybe going through an upgrade and want to start automating tax compliance and also or automating tax work and also getting compliant. And then also users of Acumatica have been using it for some time and just want to start automation. So nice to meet everybody. I'm based out of Dallas. So when I talk, you may hear a y'all or two. So I do apologize up front. Thank you, Michael.
Cool. Awesome. Thank you, Chad. Hey, everyone. My name is Michael Dominguez. I'm a Senior Strategic Alliance Manager at Avalara. What that means is that I am the primary partner manager for Action Associates, and I manage the partner relationship between Action and Avalara. This July, I've been with Avalara for 3 years, and my background actually is in manufacturing and distribution. I used to run a large winery, so I'm familiar with all of those challenges you all face. And we'll try to spice it up with some of my own personal experience working with compliance, and really excited to go over this presentation with you. Is there anything else you wanted to touch on, Mars, or are we good to just get going here?
Go right ahead.
Okay, sounds good. Thank you. All right, so here's our agenda. I know we have a lot to cover, but Chet and I will definitely make it entertaining. And if you have any questions at any time, like Mars said, please put it in the Q&A box, and we're happy to address those. Would love to make this more conversational. I'm sure you all have a lot of challenges when it comes to tax compliance. So just here again is a brief agenda. We're going to talk about some recent trends and changes, economic nexus thresholds. Every year, Avalara does an Avalara tax change update. It's a very big PDF, but it's fantastic because it talks about all the states and any changes that they're having. So I'm going to briefly summarize some of the highlights from that report. We're going to talk very briefly on taxation, on digital goods and streaming, as well as retail deliveries, and then really hone in on some winning strategies from Avalara to accelerate your success when it comes to dealing with sales tax compliance. And of course, we'll have some time for Q&A as well. Okay, so here is a great overview slide that I enjoy walking you all through because there's a lot to cover when it comes to sales tax compliance in the United States, especially we make it really complex because each state is different. So starting from the upper left of this slide, you can see there, this is again from our 2025 Avalara tax change report, our annual report. 11 states plan to reduce income tax. So what does that mean? So if we look at, because we have a number of individuals who work with the federal and state governments kind of assessing the trends in tax. And what it appears is that states are trying to lower the income tax and also property tax for different states. Because most of the states' revenues or coffers actually doing pretty well coming out of the pandemic. But as you all can see what's happening now in these times of economic uncertainty when it comes to tariffs, there may be some challenges with the states in securing that revenue. And so there is the possibility that they can start enforcing more to really bring in more of that sales tax revenue. Again, since they're lowering income and property tax, there could be the possibility that they could start wanting to bring in some of that sales tax revenue for each of these different states here. Again, you can see the 12 states plan to reduce personal property tax. I kind of just touched on that. So there are 6 states that have no individual income tax and rely heavily on sales tax revenue. That's something to be aware of. And 4 states tax services by default. This is a really interesting trend that we're seeing some states doing. Since there's not a lot of states that charge tax upon services, they are starting to go after like streaming services and digital goods. So I'm going to touch on that a little later in our presentation. You can see 41 states tax some, but not all services. And then there is also a program called the Streamlined Sales and Use Tax Agreement that 24 states are enrolled in. Chad, would you mind just briefly touching on what that we call it SST program is here at Avalara?
Sure. Yes, the Streamlined Sales Tax program. It's basically, it's like Michael said, it's 24, 25 states that come together, and basically they work with companies like Avalara. There's only about 4 or 5 providers like us, but basically they work with us. And the premise behind SST, is a lot of people call it, is basically to collect tax revenue for the states. So basically they partner with companies like us. We work with our clients, and we're able to, help bring in tax revenue for those states. And there's also benefits to utilize an SST with companies like, at least with Avalara, and a lot of cost-effective ways. So it's also very cost-effective for clients who are doing business in those states as well.
Awesome. Thanks, Chad. And so you can see here that there's already over 30,000 sellers have registered through the Streamlined Sales Tax Registration System. So there's just a little bit of an overview. Now I'm really going to touch on a key issue here, and that's economic nexus. So this slide should be updated. It's more like 6 years later, but most of you are probably familiar with the Supreme Court ruling in 2018 that ruled in favor of South Dakota over Wayfair, the furniture manufacturer that sold furniture online. So in this ruling, what was determined is that states or companies are required to collect and remit sales tax if they have an economic nexus. So this was totally new, because before, if you had a physical nexus, of course, that automatically triggered some type of sales tax obligation. But now, if you have an economic nexus, which means you hit a certain sales threshold or transaction threshold, you're required to collect and remit sales tax in those specific states. What a lot of companies find is very challenging, especially if they operate in multi-states, is that each state's requirements are different. I'm going to bring up the slide that shows how each state is different in the number or in the amount of sales or the amount of transactions. But you could just see here, and this is in our Avalara tax change report, some of the changes. This is just something to be aware of. If you are operating in one of these states, Indiana, removing their transaction threshold effective January 1st, 2024. Wyoming also removed their 200 transaction threshold July 1st, 2024. In Alaska, the Alaska Remote Seller Sales Tax Commission will drop Alaska's 200 transaction threshold beginning January 1st, 2025. So that's happened. And then in New Jersey, the Bill S3604 is seeking to remove New Jersey's 200 transaction threshold. So you can see that there is definitely a trend to removing the transaction threshold in various states within the United States. But Avalara keeps track of this for you. And when we talk a little later on about our AvaTax product, it's automatically calculating those sales tax to keep up the speed with all these different tax changes. Okay, so what this slide is doing is basically just giving a little bit more color of remote sales tax compliance not getting any easier. I do want to mention, when we're talking about economic nexus, that there's also over 13,000 jurisdictions when it comes to sales tax with the United States. We have to remember it's not just the state, but it also goes down to your county and local level. And what I'd also like to point out too is, you may think, okay, well, I don't charge sales tax, right? But I do manage exemption certificates. Well, that's important. So let me go to the next slide here and show why that is important. Because what we've seen, at least what Avalara's seen, according to our latest 2025 report, is that while the number of audits hasn't really changed, we found that states across the United States are focusing on exemption certificates. So again, if you don't have like a sales tax obligation, you probably have an exemption certificate obligation, especially if you're a distributor or manufacturer. Okay, so what this slide does, it gives you an overview of economic nexus thresholds by states. You can see here that there's some very high thresholds in states like New York, Texas, and California. But what I want to draw your attention to is that there's a lot of different colors on this slide, right? And each state is different, and Avalara can help you manage your economic nexus. Number one, to find out if you have economic nexus there. We do that through a product called our sales tax risk assessment. And we'll talk about that later on because we actually have an opportunity for you to sign up for it for free. If you are curious to seeing if you may have triggered economic nexus in one of the states you may be doing business in. But again, here's just a basic background on economic nexus thresholds by state. Chad, did you want to add anything about economic nexus or exemption certificates?
No, I really have nothing to add. Nothing to add here. I mean, I would just, reinforce the comment of a lot of times I work with clients who, that they have a lot of their sales, a lot of their volume is based on non-taxable transactions, and a lot of times I find they're unaware in a majority of the states that tax exempt forms or tax exempt transactions actually contribute to economic nexus. So. That's the only thing I would double down on and that's important because tax exempt forms are low hanging fruit for auditors. So in those states, if you do feel that a lot of your transactions are tax exempt, and you want to take a look at that, as Michael said, there will be some opportunity here towards the end of the webinar to do some sort of risk assessment we'll talk about later today.
Awesome, thank you, Chad. Okay, so when states need revenues, and I kind of touched on this a little bit earlier, especially if they're trying to reduce the amount of personal income tax or property tax for their constituents, they will start to invest heavily in sales tax audits. So why would they do this? So across the board, states usually get about 30% of their total revenue from sales tax. So that's the second biggest income generator for states after personal income tax. So you can see what a valuable source of funds this is for states to do their basic operations of running a state, right? By keeping, roads well-maintained, bridges, all the things that you need to run a state properly. So they do invest heavily in sales tax audits. I'm sure everyone's familiar with the AI boom, everyone talking about it. Well, state auditors are also using that, employing AI and data mining to find those businesses that may be non-compliant by hiring more auditors, sharing information with other states to target non-compliant businesses, increasing out-of-state audits, and then, of course, looking at audits for past years, depending on the state statute of limitations, it could go up to 8 years. And they do also encourage whistleblowing, and that could be from disgruntled former employees that are often those whistleblowers. So I'm going to spend a little bit of time on this slide, and because I think it's really important, especially if you're a company, you may be wondering, oh, could I have triggered economic nexus in that state? I've started to expand, right? You can see here, if you're a growing business, you may have generated that tax compliance complexity, and you may have created nexus if you've expanded to other states, or even if you expand to other countries. And the word of the last couple months has been tariffs, right? So especially if we're talking, if you have any type of global operation, it's important to understand what are the repercussions of tariffs on your business. Obviously, more technologies. This is talking about the Acumatica ERP, and we're going to talk about how Avalara has a seamless integration with that later on in the presentation. But definitely, if you're changing ERPs, if you're updating ERPs, if your business has been only B2B, but now it's going B2C, it's definitely something to look at because it's just adding another layer of complexity to your business. And then, of course, use tax. We have a product called Avalara, Avatax for AP that addresses any of your consumer use tax needs and helps you manage those risks. So take it a little bit of a personal level. The winery I used to run, our production was about 3 million bottles a year. We shipped not only wholesale, that was the majority of our business, to every state, but I had to manage all the licenses. So I had to make sure I had a wholesale license in that state. If we sold direct to consumer, had to make sure that we had a direct to consumer license to that state. And it was very, very strict, right? Because alcohol is heavily regulated. And if we shipped one bottle to a state, we had to be licensed in that state. So another thing to be aware of is that if you think you may have triggered economic nexus in another state, you'll definitely have to make sure that you have the license to do business in that state, right? Because you'll have to collect and remit those sales taxes accordingly. So I did all of that manually. This was over 13 years ago, and I had spreadsheets. I had calendar reminders for when I needed to update or renew my licenses for wholesale and direct-to-consumer liquor license. And Avalara would have been really nice to have at the time, but I didn't. But it took, to give you an idea of running a business, my first job there at the winery was compliance for a full year, and that was a full salary, right? Where I was able to eventually run production and operations, but we had to hire someone else. So it just allows you to look and see, pencil it out 2, 3, 5 years out, the cost benefit of automating your tax compliance versus having your staff do something that is not a revenue generating activity, right? Compliance isn't generating revenue for you. Whereas that other individual on your team could be helping with sales or marketing or production. So I always like to point this out because I know personally I was able to help our winery more on the operation side and grow and sell more wine. But having the ability to automate that sales tax would have been really helpful. Okay, now we talk about new exemptions for the distribution industry. Exemption certificate challenges could become a cause of negative audit filings. We mentioned exemption certificates before or earlier in this presentation, but a missing or incorrect documentation can result in out-of-pocket fines and penalties. And a quick example we use here, let's say your total revenue of your company is 10 million and 90% of your sales is the tax-exempt buyers, kind of like what Chad mentioned earlier. So if an auditor finds a 30% error rate in the exemption certificates they review, they'll multiply that error rate across your annual revenue. So at a rate of 8.25%, your business could owe $227,750 in sales tax, not collected, and that doesn't include any other fines and penalties. So all distributors must deal with exemption certificates, sales tax exemptions, and incentives, and of course, they're always industry specific. So this is a relatively new infographic, and it really just shows the cost of missing just one exemption certificate. So let's say your business is being audited. The auditor reviews a 1-month sample for an audit period of 36 months. The auditor finds a $15,000 sale with a missing or invalid certificate resulting in uncollected tax revenue of 8% or $1,200. You kind of see where this is going, right? The auditor assumes this amount of collected tax for each month during the audit period, right? So that's 36 months, 3-year look back. So the uncollected tax fine is calculated at $1,200 times 36 months or $43,200. Again, not including audit penalties or fees that may apply. And so in this example, missing one single exemption certificate could cost your company $43,200. So this is just something to be aware of, especially if your company's managing your exemption certificates manually. Number one, are you even collecting those exemption certificates? Can you pull up right now whether those exemption certificates are expired? So it's definitely something to be aware of, and we're going to talk here shortly about how Avalara can help you manage those exemption certificates. Sorry,
Michael. Michael, if I could add in another example, real quickly. So there's a client I've been working with, and they had a large number of their business. A lot of their business were all tax exempt sales, and basically they were fined. They spent a year preparing for the audit, and then once they went through the audit, they were fined about $150,000, and 150 of that was basically all around 3 different customers who they didn't have tax exempt forms. There were more than just 3 forms, but basically it was 3 customers, and one of those customers had gone out of business. So going back and trying to get those tax exempt forms from from a company that doesn't exist anymore is obviously very hard. Now, luckily they got it broke. They were able to get that reduced to about $43,000. But just want to provide another example of just how this is low hanging fruit for auditors, and they will penalize, and it has to be the exact form, the correct form, and it has to be valid and part of every transaction. And that's just wanted to share a real life story around, what they had to deal with, and really it was only over 3 customers in their tax exempt forms.
No, thanks, Chad. I think that's a great example. It's like, and then just like the realization that company went out of business, right? And how are you going to recoup that? So, no, I really appreciate you sharing that. And you can see just how businesses struggle managing those exemption certificates correctly. So now I'm just going to talk about those top state tax changes. I'll go through relatively quickly. We just want you to be aware and just kind of like educate you on some of the changes that are happening across different states with some tax changes. I like this example of sales tax exemptions in Texas. So the example is a person processing food for sale is a manufacturer in the state of Texas and may claim a sales or use tax exemption for purchase of equipment and other taxable items that call for exemption under their specific tax code here. The example they give is a restaurant may claim an exemption on the purchase of an oven or a mixer directly used in baking or mixing. However, the exemption in that particular tax code for natural gas and electricity used in manufacturing is not applicable when the gas or electricity is used to prepare or store prepared food. So this is an example here, right, of claiming correctly those exemption certificates, each state being different, and how Avalara can help manage those differences for you. And then the center column here, what counts as manufacturing anyway? So manufacturing, the term does vary across different states. And in reading the Avalara tax changes a few months ago, I think this example in North Carolina is a good one because it shows a sales and use tax exemption for qualifying mill machinery for specific industries. So in this specific case, the Department of North Carolina denied a mill machinery tax exemption claim for a business that was using the exempt equipment to produce hot mix asphalt. But the state of North Carolina thought they were using it for the company's own construction processes and not for their customers. But they actually were using the mill machinery for their customers. But think about the time that this took for this company, because the case was disputed all the way up to the state Supreme Court. It finally found the taxpayer to be entitled to the exemption. Again, good news for the company, but how costly and time consuming that would be managing that manufacturing exemption, right? So Avalara helps that makes that process really easily, especially with our integration with Acumatica to manage exemption certificates. Just another thing to be aware of are the changing research and development tax credits. Examples here are many expiring in Illinois, but starting in California on January 1st. Again, these tax credits typically lower the taxes your businesses may owe. And companies, you all can see that on savings to your annual bills. But those exemptions exclude some assets like income, property, and transactions from being taxed. So just be aware, there's a lot of funds out there, credits, but just aware of how those affect your tax obligation. Okay, and this is just another example. I haven't worked this specific deal. Maybe you have one in Louisiana, Chad, but I know working with other sales executives at Avalara is Louisiana could be really difficult because they have these different parishes. So the state sale and use tax rate increased from 4.45 to 5% on January 1st of this year. They repealed the local vendor discount, and they required that every local sales tax return be changed. So a lot of changes and reform happening in the state of Louisiana that you need to be aware of. Remember when I talked earlier about states looking at other sources of revenue when it comes to sales tax? Again, because they may be trying to help their constituents in their states, lower their property or their personal income tax obligation, but they still need to have revenue to run their state. There has been an increase in taxes on streaming services. So cities in California are proposing to expand utility user tax to include streaming services. This has happened in the city of Santa Barbara, and Disney went to court over $642,000 in paid video utility users tax. And then Massachusetts and New York both introduced bills in 2024 on tax streaming as well. And then just really quickly, updates in the taxation of digital goods and services. You can see here, Louisiana, looking at extending the states and sales use tax to select digital products, including digital audio and audiovisual works, digital books. Same in Georgia. There's a hearing that took place there in December. Michigan, looking at NFTs, and in Vermont, enacted a new bill to include pre-written computer software, such as SaaS, in its definition of taxable products. So I definitely see probably this continuing and expanding to other states, very similar to retail delivery fees. If you all do any business in Colorado, I'm sure you're familiar with retail delivery fees. It's because Colorado is the one who started it. They started that, I believe, in 2022. Colorado's retail delivery applies to all deliveries made by a motor vehicle in the state that contain at least one item of tangible personal property. So you can see the fee increase there as of July 1st last year. The qualifying businesses and even marketplaces are required to collect and remit fee on behalf of their sellers for this retail delivery fee. Minnesota has started to impose it last year. So what's the future of retail delivery fees? Other states are seeing the success, if you will, of Colorado and Minnesota collecting these. So they are considering retail delivery fees. Those include Maryland, Nebraska, Nevada, New York, Ohio, and Washington. Okay, and I'm pretty much going to just move forward on from this slide, because all it is doing is just explaining again a little bit about Colorado and Minnesota going to these retail delivery fees. But we just want to let you know that here at Avalara, our AvaTax can help you collect and remit these delivery fees automatically, and just takes a lot of pain and time off your hands in order to be able to accurately assess that delivery fee. Okay, and when it comes to sales tax changes and updates, just be aware that every month brings a chance for a new change to local taxes. January 1st, 2025, there was one state rate change, 159 new taxes, repeal taxes or rate changes to existing local taxes in 24 states. There were 71 new taxes, 74 increases to existing taxes, 11 decreases to existing taxes, and 3 repealed existing taxes. So we have an entire team at Avalara that's dedicated to staying up to date on these tax changes. And we also definitely use AI as well to make it easier for you as you try to manage your sales tax and your exemption certificates. So now we're just going to touch on some different ways Avalara can help you accelerate your success when it comes to managing sales tax and exemption certificates. This is just a good overview slide. It gives you just a quick one-page look at all of Avalara's products and services. Manage everything from exemption certificates and vendor exemptions. We talked about tax calculations. So with the integration we have with Acumatica, we can accurately and automatically calculate the sales tax. Returns and reporting, right? So once you find that you have nexus in the state You have to make sure you have a license and that you're registered to collect and remit sales tax. You got to accurately be able to assess that sales tax, or make sure that you have the exemption certificate on file. And then you have to do the returns. So the M on each of these boxes are managed services that are optional, but are definitely helpful if you're doing many transactions and you just need a little bit of extra support. We can also support with e-invoicing and live reporting. E-invoicing is being mandated overseas and will more than likely eventually arrive here in the United States. Again, those supporting products I mentioned, licenses, registrations, tax research. Avalara has a tool that will help you identify the product taxability. It's almost like an internal search tool, but it's using Avalara's proprietary information with our relationship with all of the states. So the best example I could give for this is when I was running a large winery and I was doing compliance, I had to go to each state's website, find out what were the requirements for getting a license in that state. And ATR, we call it, Avalara Tax Research. You just type in the question and it automatically comes up with you with the correct way to do business in that state. Item classification, again, we've been talking, you've been hearing a lot about tariffs. Avalara has this product called HS Tariff Codes that allows you to properly have the 6-digit code that assesses the right tax if you're exporting goods, because that tax could be different based on the product and based on the country it's going into. We also support 1099s and W-9s and property tax as well. We have our integrations, you can see, not only with ERPs like Acumatica, but we have over 1,200 partner integrations. So it's pretty vast, a lot of different ways to plug in to support you and automatically do your sales tax exemption certificates and returns. All right, so I am going to, Chad, do you want to do these, just touch on these last couple of slides since you're the Acumatica expert?
Yes, absolutely. So one unique distinction between Avalara and other competitors and other tax solutions out there in the market is we have over 1,200 pre-built connectors. And one of those connectors is into Acumatica. So what I mean by that is Acumatica actually built the integration and the connector into Avalara, specifically Avatax and our exemption certificate management module. So first, from an Avatax perspective, if you have clients, where you are charging some sales tax, even if you do have a large portion of tax exempt sales and transactions going on, basically within Acumatica, as an order is keyed in, it will automatically calculate the correct sales tax based on the good and service, based on the tax law in that state and or jurisdiction, and it will break it down to the jurisdictional level or to the parish level, like Michael was mentioning regarding Louisiana. So if you think about today, if you are using Acumatica, you have tax tables, and those tax tables do not automatically update. So as tax rates are changing, you manually either have to go in and configure themselves, right? With Avatax, basically you point the tax zone straight to Avatax, and Avatax becomes your tax engine. As you continue to grow into other states, the system is intelligent enough to know once you say, hey, I'm now selling in Louisiana, it will automatically start collecting in sales tax. If after you register, which we can do that for you, it'll automatically collect sales tax and start charging the correct sales tax based on the good and service, again, in jurisdiction. Also, within that same connector, it does connect with our tax exempt module, our exemption certificate management module. So basically within Acumatica, you can store, manage, monitor all your tax exempt forms, and even collect, and even set triggers that allow you to collect, recollect expired tax exempt forms, like for example in Florida, where they expire after every year. So once again, the key here is I want to make sure it's known that Acumatica actually built it themselves, and they continue to enhance it.
That's awesome. Thank you so much, Chad. And you can see the examples of some customers integrating Avalara with Acumatica there to the right. So I think I have another slide for you, but it kind of touches on, do you want to add anything else? But it I think, does a good job summarizing of what you just covered, Chad.
Yeah, I don't think I have anything else to add here.
Okay, awesome. All right, so we're towards the end of our presentation. We hope it was helpful to just provide just overview of some tax changes happening and explaining economic nexus again for those who may not be familiar with it, talking about sales tax, about exemption certificates, and also showing just a little bit of information about all the other Avalara products and services that we can help you with when it comes to your 1099s, property tax, consumer use tax even. So for those who attended this, we have a special promotion. If you're curious to whether you may have triggered sales tax in other states, we have a free sales tax risk assessment promotion for you. It's a $4,500 value. What's included is a guided nexus questionnaire to complete at one's own pace, an in-depth analysis of economic and physical nexus obligation, and this full report, and it does go back 1 year. And definitely, if you're interested in learning more, there's Chad's email. So just please send him an email. Let him know that you're looking forward to talking to him, answering more questions. Again, he's the expert on the Acumatica Avalara integration. And I guess now we can field some questions. Did you want to go through the questions, Mars?
Sure, yeah, I would love to do that. As Michael was saying, please, if you have any questions, put those into the Q&A session now. We do have a couple as it stands right now, but if you're heading out, we want to thank you for coming in and joining us today. Your company's account manager will be in touch soon, so if you have any later questions, they'll be happy to answer those. But if you're leaving, please do fill out your post-webinar survey, as your feedback is extremely important to us. But we will get to the questions now. All right, first question, do I need to change anything in my ERP to use Avalara?
No, you do not need to change anything in your ERP to use Avalara. Avatax's work has connected with Avalara. It's a very easy connection. It basically takes at max 2 hours. No adjustments need to be made. Nice thing about Acumatica building the connector is that there's no modifications that are needed either if you're going through upgrades. So if you're moving from 23.R2 to 25.R1, Avalara will completely upgrade with you. The nice thing, and I was talking about enhancements earlier, the enhancement that Acumatica made last year was integrating our ECM, our tax exempt product into Avalara, or Acumatica. So if you are using 24.R1, our ECM solution will also integrate into 24.R1.
Perfect. Thank you. Next is, should I have a database for certificates I can reference, or should I link them to each transaction?
I would say ideally both. From a database perspective, you should maintain a centralized database, a system to store and organize all your exemption certificates. I'd recommend, indexing them by customer, state, expiration date, baby business entity. Also, and this is where, it really comes in play here, is you want them also to be linked to transactions. It's best practice to have them linked to individual transactions. That way, if you are ever audited, you can easily show the transaction where you're tax exempt and prove this is why we did not charge sales tax here. So in that case, yes, you would need to have both a database, but also a link to those transactions for sure.
Perfect. Next question. There are some states that include an expiration date on their certificates. Do we need to make sure that we have not expired certificates from customers for those states, or is it okay that we got a new one every few years?
Yeah, good question. So it depends on each state. Each state has their own rules. Some states, tax exempt forms do not expire. Some states like Florida, they expire every year. So you do want to make sure you have valid, unexpired certificates on file, or being managed in some way, tracker, somewhere, shape or form. And you definitely do want to track those expiration dates and renew certs as needed. And that's where, a lot of companies, before I meet with them, they're doing it manually. They don't even know where all their tax exempt forms are. I've had customers who their customers have gone out of business and there's no way to go back and collect them. So it is best practice to have a system in place that will automatically and can automatically actually go out and retrieve and collect tax exempt forms from customers. The other thing I will say is, if you do a risk assessment, if we do that together with the, with what Michael offered earlier, which I can do for you all. Let's say we went through an exercise and we noticed that you had triggered economic nexus in a state and we're not aware. Always my recommendation in these cases is you go and collect all your tax exempt forms from those customers before ever registering in that state. Because the minute you register in that state, you're basically saying, hello, we're doing business here and you need to account. They may come back to you and say, why haven't you been charging sales tax? Well, our sales are non-taxable. It doesn't matter at that point. So that's why it's very important if you do register in the state, that you have a lot of non-taxable sales, that you do retrieve those first and then register. And those are two different areas that Avalara can also help you in as well.
Fantastic. All right, last question for now, but if anybody has any follow-up questions off of these, please fill those in. What if each location is under different business/franchise? Should I get different exempt forms?
Yes. If each location is operated, for example, under a different legal business entity or franchise, then you would typically need to, collect a separate exempt form for each one. And the reasons why are, one, they are tied to specific business entities, making the purchases. And even if the franchise locations operate, under the same brand name, it's all around the legal ownership because it matters from a tax documentation perspective. And, tax authorities usually require that exemption forms reflect the correct legal name, address, and tax ID of the purchasing entity. So yes, it is definitely very important.
We want to thank you again for joining us today and have a great rest of your week. And we'll see you guys next time. Thanks, everyone.
Thank you.
Thank you.